week right now. But let me welcome on board Kuldeep Jain, the founder and MD at CleanMax Enviro Energy Solutions, and talk about their quarterly update. Great to have you on the show. Thank you so much for your time, Kuldeep. Firstly, wanted to talk about the fact that you had guided for a minimum of 1.5 gigawatt of capacity additions in FY27. However, with your record-breaking Q1 addition of over 500 megawatt, you're already tracking well ahead of that run rate. Are you anticipating the total capacity additions to cross your previous guidance of 1.5 gigawatt then?
Hi, thank you. Yes, the guidance was always a minimum number. So we said we will do at least 1,500 megawatt or more. And we are well on track for that. And with the record quarter where we did 500 megawatt in one quarter itself, we're certainly on track for, beating our guidance.
Okay. And what should one assume then, considering you're saying that 1.5 gigawatt is only the base case? How much more of a headroom from that mark?
I don't think we can give a number right now because in our business, these projects take a year to put up and there can always be a slip up by a quarter here or there. So, I think it's safe to say we are well on track to meet or beat our guidance of at least 1,500 megawatt new capacity this year.
Okay, interesting. But tell me, you mentioned that, the 30% curtailment at the Bikaner project is expected to be resolved by September 2026. If the grid upgrades are delayed, what is your backup plan and how much of an EBITDA could remain at risk, according to you?
So, the Bikaner project is about 13%, 13% of our total year's EBITDA. So if there's another 6 months of delay in that, that's about a 3 to 5% hit to our annual EBITDA. So, that's really what we are looking at.
Kuldeep, hi, morning, Sajid here. So how are you looking at the entire order book from a point of view of the new data centers which are coming in? Are you able to garner a major share of that as well for you?
Thank you. We are already, we've got a pipeline of 2,600 megawatt. And about 42% of our entire pipeline is for data and AI clients. So it's a big share of what we do. In fact, if you look at the hyperscaler business in India, this is firms like Meta, Google, Apple, Amazon, and so on. We have in excess of 35% market share of their contracted volumes in India. So yes, it is a big part of our growth story. And, our total volumes with data and AI have grown 10 times in just 2 years. So that's 10x in 2 years already. And today it accounts for 42% of our overall volumes.
And what Meta and Google and other hyperscalers are investing billions into adding data centers there. Do you become the natural partner for them to supply these supply power, or is it a bidding process that you have to go through?
Let me point out how big the size of the opportunity is. So for a gigawatt data center, that's about 1.5 gigawatt of round-the-clock power load, which is about 9,000 megawatt of renewable energy. So when people say a gigawatt data center, like for instance, Google is putting up in Vizag, that's about 9 to 10,000 megawatt of renewable energy to supply that. Or in other words, 40,000 crore rupees of capital expenditure to put up renewable plants to supply such data centers. And the growth being talked about is in an incremental 5 to 10 gigawatt of IT load in data centers. So that's about somewhere between 2 lakh to 4 lakh crores of aggregate capital expenditure in renewables to supply such data centers. And today we do have a 35 to 38% market share of that business. So, how much more we win, they'll certainly use multiple suppliers, but today we enjoy 35% market share of the hyperscaler contracts in India.
So out of this guidance that you've set out then, if I were to just draw it down, Kuldeep, 1.5 gigawatt, which you in your own words said that you'll definitely manage to beat, how much, or rather what fraction of this guidance actually depends on, the AI and the data center piece?
So it's contracted, and therefore it's sort of it's firm. And I would think about 40% of the volumes we are doing this year. So at least 600 megawatt out of the 1500 megawatt is for data and AI.
Is the
And that's
high?
true.
This is,
Even
sorry.
even if you look at our overall volumes of 5,700 megawatt, 42% or 2,400 megawatt of contracted deals are with data centers.
Hi, Kuldeep. This is Harsh also joining in. Give us a sense, therefore, is AI data center, in terms of your power supply to them, are they at slightly better rates or are rates largely in line with what you would typically make?
I think that given the volume requirements and so on, the rates are slightly better overall. But fundamentally, our business model as CleanMax is to supply directly to end customer, whether that end customer is a data center or a chemicals company. It's a B2C business in the power sector, and therefore our tariffs are higher. So for the 2,600 megawatt contracted volumes, our tariffs are 3.81 rupees, which is much higher than what companies serving utilities, whether through SECI or other bidding, managed to get. As you know, that is around 2.5 rupees for solar or 3 rupees for wind. For us, it's 3.8. So we operate at a much higher tariff point, and data and AI clients also pay that.
And with regard to the 4.5 gigawatt guidance that you have by FY28, where does that take your revenue clip to, if you can give us a sense of that?
So in our business, we talk about EBITDA and so on because it's a 85-86% EBITDA margin business. So yeah, it takes us, our run rate EBITDA at the start of this fiscal was around 1,900 crores, 1,870 crores to be precise. That increases to slightly above 3,000 crore run rate EBITDA by the end of this fiscal with the additional capacity coming up. So from 1,800 to in excess of 3,000 crores.
The projections that you're putting in, does it also involve the BESS element as well? Or if you add that, the tariff can go up more?
So this year, some of our projects have BESS or energy storage also in it. But from next year onwards, we see BESS being a bigger contributor. And essentially, storage enlarges the size of the addressable pie for us because we can basically store solar daytime power and give it to clients in the evening when power is more expensive for them. So, that enlarges the size of the business opportunity for us.
Does that mean that you will have to tap the market again to raise equity as well?
So we are quite clear that having just concluded our IPO in, we got listed in March. So we don't need to tap new equity for at least 2, maybe 3 years.
Okay. And the debt that you have is SPV wise, I would suppose.
That's right.
And therefore mapped with the kind of long-term contracts that you have. Does it also carry a moratorium, which is post PPA getting active? That's when the interest triggers happen.
So our debt is at levels of 4.5 or 5 times debt to EBITDA. So it's quite comfortable, and you're absolutely right. It is by power generating SPV. And yes, lenders do have certain standard clauses around moratorium for ramp up and so on, which would be applicable for us as well.
Interesting. Okay, Kuldeep, great to have you today on the show. Thank you so much for your time today. Good speaking with you.
Thank you, guys. Cheers. Bye-bye.